Happy Friday and welcome back to Real Estate Mindset. Today we're going to go over all of the recent data on the job market, unemployment information. We're going to see what impact that has on mortgage interest rates. We're going to tell you guys the problem with an amortization schedule, and the meats and potato under the hood part of this video is going to be Mitch talking about and explaining to you guys the twist, which is the Federal Reserve, and the crime, which is the false, fraudulent indicators. And we're going to use things like the Roman Empire to tell that story. Now, before I continue, Mitch, happy Friday, sir. Thank you for your time. How are you today?
It's, as usual, it's been very long. We actually received another lawsuit that came in. So late last night, about 11 o'clock, I sent it over to Matt Nowak, my attorney. I think I want to write an amicus brief in support of it, but that one is almost neck and neck with where we are, complaining about a very similar situation of fraud. So that's pretty interesting. I'll be working on that for most of the day today.
I mean, the power of community, Mitch, the power of speaking a great message via video, it's overwhelming, man. I'm so proud of what you have accomplished just in a month of knowing you. And you guys, don't forget, if you guys want to be a part of fixing the system the best that we can, and honestly, it won't take a lot of us. Don't forget, in the description, there's a petition. Sign that petition. That's step one. It will take you 10 seconds. Step two, though, is understanding what problem there is, understanding what you can do as an American citizen to create real change. And all we ask you to do is save your money, learn how to save your money. So in that sense, I also have a link to the Fight Property Tax course below. It's only 50% done, but if you take it, it'll probably take less than 30 minutes. The lessons are about 50 seconds long. If you take it, you will understand the difference in things like assessment value versus market value, what a CAT is, things of that nature. You guys, that's 100% free for you. We've been working tirelessly to make that. So half of it's done for preview, but Mitch, let's jump into the market right now. So U.S. economy adds 142,000 jobs as unemployment rate drops from 4.3 to 4.2. But you guys, don't forget, there is a tendency to revise this data downward. But regardless, this is the data that came out. Now, let me show you the impact on the market. Very insane, Mitch. Absolutely insane. Starting with the VIX. The VIX, Mitch, oh my. So the VIX was up to $22, right? It was like double digit on the VIX. This is a measure of volatility. And then the job numbers come out. Unemployment goes down because the market is fooling you, okay? And the VIX drops. There's no more volatility. Mitch, there's no more volatility according to this. Really crazy. Moving on, Chicago Fed's Goldsby says job and inflation trends and unemployment went down. This is how sideways everyone is and how corrupt everything is. Justify multiple interest rate cuts and soon. Now, let me show you the 10-year. The 10-year, Mitch, if you can see this, the volatility and manipulation in the treasuries is something to speak of. The treasury jumped up about 13 basis points from where it was at, right before the job numbers, and then it jumped downward, and now it's back up again. I mean, again, the volatility is something to behold. Here's where we're at with the futures. The market's not open yet. By the time I have this edited, the market probably will be open. And Mitch is going to talk about this here in a second, but the futures have actually started to reverse. The futures were down pretty drastically right before the unemployment came out. But let me show you guys where we're at as far as mortgage interest rates. Now, mortgage interest rates over the last few weeks have been plummeting. And I say plummeting because they've gone down nearly 100 basis points. But right now you're looking at today's mortgage rates. This is as of yesterday. This updates around probably in the evening, afternoon sometime. But what you guys see right here, the 6.35% is a residential mortgage rate, and this represents conventional mortgages. Now, if you've been following along with me, if you have been taking my courses, you know that generally, and this is my opinion, I'm not a financial advisor, if you shop your mortgage and you remember after the first inquiry, there's a grace period that the second inquiry won't hurt you for a number of weeks. If you shop your mortgage generally with a broker, you should get about a half a point lower than what you see here. And also one more thing before I give it up to Mitch, FHA is lower, all right? It is what it is. FHA is lower. FHA is already under 6. More than likely, if you're shopping right now and you get an FHA mortgage, it's not going to be 5.72. It's probably going to be 5.25, y'all. So rates are near upper 4% right now with FHA. Here is the demand index. So I wanted to show you guys that, yeah, rates have gone down. You see that with the orange line. So the orange line represents interest rates. So you guys clearly see interest rates have been dropping. Now above that, you're going to see the purchase index. So how many people are actually purchasing houses? And you see that it's actually gone down from the 7.22%. So demand has actually dropped as mortgage rates have dropped. Now, last thing here, guys, before I go into the amortization schedule and we talk to Mitch more, CME Fed Watch has flipped again. The market is now anticipating, 51% of the market is now anticipating a 50 basis point rate cut in September. I mean, this flipped 12% after the job numbers, which everyone knows are fraudulent and everyone knows they're going to revise, and CME still flipped. It's just so crazy. There's no consistency at all in the market. There's literally no direction. And so I want to end here, Mitch, and then I just want to give it up to you because I really want people to understand, that right now it's almost a slam dunk to rent over buy right now until the math makes sense, until the economy calms down. This is an amortization schedule, okay? And what I've done is I put the average loan amount of $324,000. I put in today's rates of about 6.35%. I calculated the interest, and what I want to show people is your rate's not really 6.35%. The way that these amortization schedules work, your rate is more like 120%. Again, your rate's more like 120% because look at all the interest you pay back. You pay back a $401,000 in just interest. And here's an amortization schedule right above my head right here. You guys see that in 5 years of paying this note, in 5 years, you pay down roughly about little more than 21,000. That's it. So if you really want to conquer these amortization schedules, if you guys paid the first year of ownership about 22,000 towards your principal, y'all just knocked out 5 years of your loan. And in case in point, look at the first year, you paid $20,466 in interest, but the last year, you only pay $811 in interest. And the year before that, $2,246 in interest. So what I'm saying, y'all, is these amortization schedules are front loaded. And if you don't pay attention to what's going on here, you will be trapped in this type of debt. So again, I'm showing you if we're renting, we're free, less stress. The landlord will fix our stuff. Yeah, we're wasting our money per se, 100% in interest. But if you buy a house, you're going to pay 120, 130, 140% in interest. And Mitch, this is not even including things like property tax, homeowners insurance, HOA assessments, maintenance. It's not even including any of that. So can you go into, what's going on in the stock market, first of all? People are going to want to know what's happening there, even though they probably have no money in the stock market, Mitch. And then will you head on over and kind of end this segment talking about, how much worse that amortization schedule really is when you add the taxes and insurance and things like that?
Sure. So let's go kind of back to the beginning because I took my notes and that was quite a bit to follow up, but here we go. If you had a briefcase and inside of that briefcase was a document, such as Mr. Powell, the Federal Reserve Chair, and he has a briefcase, and inside that briefcase are his notes as to what it is he's going to say. At best, in terms of what you as a retail trader and or a professional trader could do, is simply a 50-50 bet, one way or the other. And where I'm going with that, when I said that these reports don't matter, they don't matter because the market is going to do what it is going to do. Sometimes the market, when the algorithms kick in after an announcement, will go positive. And in fact, that is what happened today in the NASDAQ and the S&P. So the markets were generally down. The report comes out at 7:30 and the market reverses. Well, remember, the markets are about price discovery. So they're going to go up, they're going to go down, they're going to bounce off certain holding points or pivot points. That's just what they do. So the idea that somebody can game it on a short-term basis, there's patterns on a short-term basis, but on a longer-term basis, can you game it in a day and say this is where the market's going to go? No. What you could do is look at the options chain and say within a 30-day period or a 60-day period or a one-day period, because they actually have 0-day options now, you could game it that way using the delta as the probabilities. But to that point, if people actually understood and could see it in advance, you would have an explanation for what happened 2 weeks ago on a Sunday night when the market liquidity dried up. In other words, they would see it. And you went from volatility the day before of roughly 19 to Monday morning at 52. That, I believe, in terms of its importance, has only happened once out of 3 times in the history of the stock market. In other words, it doesn't happen. Well, that proves my point, which is you can't see it in advance, and the market is going to do what it's going to do. And all this other nonsense about these reports, some people swear by them, but the truth of the matter is they're not based on math. And we even know that the Federal Reserve, their actions are not based on math. They have the ability. They got 23,000 people in that office. They've got the ability. And they even have something called a Maholanobis report, which is great. But the problem with that report is that it depends on certain types of inputs. And those inputs have to be accurate. So first, you have to set the criteria here. And then you have to take the inputs here and tie all this in. This has got to be accurate, and you got to define and not monkeying around with the original criteria. Criteria, inputs. If you can't get this stuff right, the reports don't matter. They're completely fraudulent because nothing in them is dependable, i.e. the employment report. So then you come to a guy that you mentioned in one of those articles by the name of Goolsby. I think he's a professor, if I'm not mistaken. Seems to be a very nice guy. Bottom line is he's a talking head without the benefit of intellect. And I'm not picking on him on a personal level, but when you get on a program and say, well, I think this and I think that, you just violated everything I just said, which is you have delta. You have an options chain. Come at me with some math and tell me why you think it. I don't give a damn what you think. I really do care, seriously, what you can prove. And that is the underlying point. When they get on the air and all these people are yipping and yapping, it doesn't matter. Stop listening to them because you're just going to drive yourself crazy and you're going to make stupid decisions. It's one of the reasons I'm surrounded by monitors and TVs. I haven't watched the TV in years. I don't want this stuff dancing in my head. Everything I need is sitting right there on that chart. So over and above that, with regard to your question about debt, debt is a good thing. It can be handled when you know how to handle it. But if you don't know how to handle it and you don't know what is included in it and you can't define, well, my property taxes aren't included, my mortgage insurance isn't included, an amortization schedule is just simply based on the debt. When you actually take those other items in, and you can do that in an amortization schedule, you can literally say my cost in month 11 is going to be X dollars in terms of taxes, et cetera, et cetera. You can build that into your amortization schedule. So not only do you have the amortization schedule, but you have your all-in costs, and those all-in costs equals your all-in budget. Those things in combination will tell you what the truth is. The truth is in the numbers, not in listening to what is coming out of talking heads' mouth.
Yeah, honestly, Mitch, I kind of wear my heart on the sleeve. I want to trust people, right? I want to. It's in my nature to trust people, but I verify. And even with you, and this is, you've blown me away so much because I've verified what you were saying, right? I've used math to verify what you're saying. I've gone into my own markets and said, all right, let me look at the school districts, and boom. A lot of what you said, though, as far as the overvaluation in CAD and taught me there, the systemic depth of that, I wasn't able to articulate it. It wasn't until I met you where you helped me see the missing pieces of the puzzle that it really started to click to me. So if we can, let me do a thought exercise with you and for the viewers, because I want them to see that, what you're saying, how the market is actually doing exactly almost exactly what you think it is. So the market hasn't opened. We're in futures right now. Here it is right here. Obviously it's crazy. It's back up in the green. It was deeply in the red. Before it opens, and we're about 6 minutes away. You guys can time that if you want. On the bottom right, you see the time. How do you think this sucker is going to open, and how do you think it's going to go throughout the day?
1, 2, 3. It's probably going to open up, and in about a half hour, it'll start reversing.
So reversing downward?
Yeah.
Okay, so about half an hour.
I'm not perfect, but we'll see how this plays out.
So far, you've been doing pretty good because I have all kinds of data, and when Mitch says something, I look at the data. I'm like, oh my gosh, how'd you do that? How are you doing this? I mean, you don't listen to people, Mitch. You're just using math to find out the truth. Is that fair to say?
Yeah, and I'm not looking at my spreadsheet, but on my spreadsheet, I would literally right now plug in the VIX if I was really going to trade this. I would literally plug in the VIX and I would be able to determine within the next 5 minutes or 15 minutes what the market would do at the high end or the low end of that 15-minute time frame. So I've just gotten used to what these patterns are looking like, but I wouldn't trade the pattern. I would trade the pattern plus the math. So I'm looking for the market to spike, even though it could be a small spike in a 1-minute bar, but if it spikes up and it's got a tail, that tells me that people are looking to go short. So I take that information and then I figure out, okay, here's the high, here's the low, based on the current volatility. It's a formula. And then I know if that's where the low is, I'm aiming for that low. So it's a fairly short-term trade, and that's all it is, right? But you can apply the exact same math on a 1 day and a 1 week, and then you can take it up one level and look at the options and say, okay, the delta on the options gives me the probability of it hitting X point. So if that probability is only 3%, that's a low probability trade. And everything that I do, even through the statistical analysis of standard deviation, is all based on probabilities. It's got nothing to do with people yipping and yapping, because they're wasting my time. They're wasting everybody's time, in truth. And frankly, that's why so many people are in trouble, because they listen to what's happening around them. Well, I got to keep up with the Joneses, and on CNBC it said this, and on MSNBC it said that, and on Fox it said this, and that's where Goolsbee spends some of his time. The bottom line is they're just talking heads without the benefit of intellect, because they refuse to look at the math.
And I'm going to try to get you to the twist and the crime, Mitch. But first, let's take a step back, and I want to get your thoughts on, something I've been thinking about, something that, again, you've helped me put this puzzle together. It's a complex puzzle, man. And part of that is, my feeling, Mitch, is the quantitative tightening and the job loss that the Federal Reserve is causing, which should be illegal, by the way. The Federal Reserve should be illegal. I'm wondering if that job loss that the Federal Reserve is creating is a result from the elites or the banks' bad spending habits. Are they, in other words, the wage gap, right? They're bailing out the banks. They're causing us to be fired. And all of the data is manipulated. So as consumers, we can't prepare for the challenges that are coming. And it's very disheartening, Mitch. So here again, here's the unemployment. It did go down to 4.2. You can clearly see the trajectory going up. Everyone talks, not everyone, not the bulls. Some bulls do, though. There are some good ones, is going up. You can clearly see that trajectory going up. So under the hood, a lot of damage. Here's the 10 and the 2. I know, Mitch doesn't like looking at this, and I understand why. It's greatly manipulated. This indicator no longer works. It's full of corruption and fraud and manipulation. But regardless, we have an inverted and then inverted again. So based on, if we can trust this, the clock has started. The recessions are either here or right around the corner. We see that in the inversion. It used to be trusted. A lot of people, and I think Mitch would make the point that as soon as we left the gold standard, a lot of the stuff is trash. I wanted to bring your attention here, Mitch. We have a new low for the reverse repo market. So new low from when we hit the peak, which is good. Finally, right? Finally, I kind of look at this as the suspension from the elites. Okay, this is like the excess money. It's going down. So it has dropped to 291 billion. By the way, that's still a ton of money. But this is a new low right here. So there are some indicators, but really what I'm interested in is getting you to articulate for the viewers, how, can you just explain how bad the QT is for the quantitative tightening for American households?
Yeah, the quantitative tightening shouldn't happen, and neither should the quantitative easing. I am a huge proponent, literally, to put chains on the doors at the Federal Reserve. So when you look at these reports that you were just showing, if people understood that quantitative easing in reality is a way to backstop problems with the banks. However, quantitative easing creates inflation, and inflation is a tax. So all that is happening, and all these things are hooked at the hip. When you have a tax throughout society, right? Because it affects everybody. It doesn't matter who you are. If you're a restaurant owner, you're affected. If you're a single-family homeowner, you're affected. If you're a multifamily tenant, you're affected. So the quantitative easing creates inflation. You print money, in order to help backstop the banks or whatever crisis the Fed has created, because in truth, they've never been on the right side in advance of a crisis. They've never stopped a crisis. They're 100% reactionary with the idea of being able to backstop the banks. The point of the matter is they shouldn't exist, because that's not normal market human behavior. Normal markets are clear. You let the market do what the market has to do, including the banks holding proper tier 1 capital reserves, which they don't, which is why you need the Federal Reserve pumping money. The problem is the more money they print into M1 and M2, then the greater the inflation. The greater the inflation, the greater the taxation. And that's what you're living through now. When you go to the grocery store and you buy orange juice and you say, well, holy mackerel, this has gone up 200% in less than 12 months. Yes, and that is a direct result of quantitative easing. It's a tax. The inflation you are seeing is quantitative easing equals inflation equals a tax. That's why you've got less money in your pocket. And that actually comes back to why we're talking about eliminating property taxes on the houses. However, different topic. With regard to the repo, okay, and you're saying that that's down. Here's the point. When things get bad for the banks, that's going to reverse and it's going to double up very quickly. Why? Because the banks are going to need to put their money into that repo account at nighttime in order to keep the lights on at the banks, because the government pays them interest to put that money back into the coffers of the government, even though it's overnight. However, the banks are dancing on a razor blade. They don't have the tier 1 capital. It's been proven in multiple articles. And we just had one recently, like 3 or 4 weeks ago here in Dallas. They had to go raise $247 million of investor capital. Otherwise, the Fed was going to walk in on Monday morning and take the bank. They got lucky. They got the money. But that bank was doing deals. This is a bank in Dallas doing multifamily apartment deals in downtown Los Angeles. It's inexcusable. It's illogical. It's inexcusable. They haven't got a clue. They don't even understand the tax structure. So the point of the matter is, why is the Fed rescuing and stepping up to rescue the banks? You're not going to rescue the system this time around. It's gone too far. We went through that. I mean, the parabolic debt level is such that there's no money left to pay. Mom and pop, 37% of your population, which is what we've shown, household population cannot afford right now the roof over their head. There is no more money left to pay. 67% of the population, true property owner population in Denton County, cannot afford what Don Spencer is saying is the median value of a home. Well, if 67% can't afford it, 37% are going to lose the roof over your head. It proves the point. There's no more money to steal. The Central Appraisal District chart has gone parabolic. The Tarrant Appraisal District chart, in terms of the debt loads, which is why the schools are showing up to say you must increase the property values, has gone parabolic. The Federal Reserve numbers have gone parabolic. That's 3 sets of independent criteria, 3 sets of numbers, all parabolic, proving the point that there is no more money left to steal. And once you understand that, then you say, okay, well, the repo is complete nonsense. The quantitative easing is complete nonsense. They can print and say whatever they want, and it gets worse because quantitative easing equals inflation, equals tax. Those are your inputs. And then over here, they've got the manipulation machine running, saying everything is fine. Well, if everything is fine, then I would love somebody to explain to me how you've got 3 sets of independent criteria, all parabolic.
Well, mom and pop and the consumer, the citizen, that's, as you say constantly, the economic engine. Without that economic engine, without consumers, mom and pop doing well, I didn't even say thriving, but surviving, it all comes crashing down. And so do you think, Mitch, that, and I know we have a lot of data, you and I have gone over a lot of data, the charts with the Federal Reserve, to me, that's probably one of the biggest indicators on what's happening. But do you believe the trajectory of unemployment is a good recessionary indicator?
No, because the numbers are cooked. The books are cooked. There's simply no way this is 4.7% or 4.2%. Call it whatever number you want. Why? Because the BLS, the numbers that they're pumping in, remember I said over here, you've got to get your criteria right. If you don't count how many people have 2 jobs, how many people have 3 jobs, if you don't take your information coming out of a survey at a grocery store, your inputs are false because you didn't even hit criteria number one. You didn't talk to mom and pop. Right? You are backfilling data to create a narrative. The narrative is a straight up lie. You got 20 million illegal aliens that have come into this country. Okay, add 20 million to the 4.7. Congratulations, it's 10.8. One number, one function, and you got 10.8. The report is just complete nonsense.
That's good. That's good. I didn't even consider that. Great point. I know we can't trust the data. It's hard for people to understand what's going on when they're constantly being lied to, and the people that are coming out to warn people are being belittled. They've literally, the media, the elites, the professionals that are on the payroll, realtors, financial advisors, they don't like us, man. They don't like us. And the reality is these professionals, Mitch, and I think when Alan Greenspan said this, I think pretty good. I think it was 2008, 2009, but Congress asked Alan Greenspan, the Federal Reserve, before Ben Bernanke, what he missed, right? Like, why did we go into the GFC? Why did we go into the great financial crisis? And Alan Greenspan, in so many words, said, you know what caught me off guard? People's dishonesty. In so many words, he said, I assumed people were going to be honest. And, we don't have to guess if this data is being manipulated. We just did a video on the 818,000 jobs that vanished. It's very discouraging because no matter what party represents our country, Mitch, I want them to do well. Right? I vote for a certain way, but regardless, it's whoever's in office is technically my president, and so I want to see them do good things, not only here at home but around the world. And when you're lying to citizens and manipulating data, and it's always the same thing, I don't trust them. I don't trust the data. I don't trust our government, and it's an absolute shame. All right, let me get you into the briefcase. I want to pull up the zero hedge. We'll talk about some false predictors, but can you explain one more time? You said something that the first person that said this, Mitch, that I've listened to, about how, and confirm this, you believe it's possible that if there is some type of additional QE, quantitative easing or stimulus, you can actually see, or even if there's not, you can see the reverse repo jumping back up. Is that correct?
Well, that's a guarantee because the banks can't make it. There's too many banks in the system now. The Federal Reserve mathematically cannot rescue everybody. It is not going to happen. So
Mitch,
they'll say to the bigger banks, okay, put your money back in here. We'll pay you X dollars. This is 2007 all over again, except it's worse because of the rule of 72. They've managed to monkey around for multiple 7-year stretches, kick the can down the road, and increase the debt to the point where it's now straight up parabolic and there is no money to pay for it. And then with regard to what you said a second ago, here's how twisted this is. What we're talking about here on these videos is purely non-partisan, right? It doesn't matter what side of the table you are on. The reality is eliminating the property taxes is good for your family, it's good for your friends, and it's good for your pocketbook. And to the point that George Gammon and his attorney, Robert Barnes, brought up, this problem is that it's so systemic in the fraud that these people are literally making their living on the backs of real estate taxpayers. It's not that we don't want to pay tax. You want to pay tax that is quantifiable, not subjective. They've taken something that should have been quantifiable under uniform standards of professional appraisal practice, if you do what the law says, and turn it into something that is 100% subjective and in truth criminal. So yes, there's a lot of people that are very annoyed at not really us. In truth, if they looked in the mirror, they'd be annoyed at themselves. But this is not a partisan issue. Everybody on both sides of the aisle, or three sides of the aisle if you want to count the other one, should be standing up and saying, yeah, we've got to reverse course, because if we don't, you are going to end up in a greater depression. That's what those charts are showing. When something is parabolic and there's no money, that means there's no explanation. And that's why I said you either get in front of this market, because when this market kicks in and it does it on its own, you're not going to be able to blunt the damage. Get in front of it and you can blunt the damage. There will be pain, but it's the right type of thing to do because there is a solution to this.
And also, another point is that's kind of blew me away is, again, when we look at the parabolic charts, you see they can't use the math. So it's like, why are they not using the math? Why are they not using USPAP, which again, you guys, is the Uniform Standards of Professional Appraisal Practices and Standard Deviation? They're not using the math, Mitch, because they can't. If they use the math, they will go broke tomorrow. And so I wanted to ask you.
Wait, they're broke today. Let's get this straight.
I apologize. You're right. I'm still processing everything that you've exposed me to. But let me ask you, do you think that an event, some type of event collapse will happen when the reverse repo market reaches zero? Do you think anything will happen when it reaches zero, if it ever reaches zero?
The reverse repo will not reach zero because the banks are greedy. And
Wow.
the banks will get into trouble. And when they get into trouble, which they are right now, it's just a question of what day is going to be what trigger, and nobody has the answer to that. But when you look back at the parabolic and the cost, like, there is no money to reduce. Whether you say it's 163 trillion or 147 trillion, it doesn't matter. There's no money to pay for it. They cannot steal more money than what they've already done, because 37% of the households, and by the way, it's not just debt, Central Appraisal District. We're seeing a very close number on multiple districts, not just in Texas, but we drew down Ohio yesterday. Ohio was like 35.3%, if my memory is right. So it's 35, 37, 41. They're in a very tight bracket. It's quite interesting that regardless of the size of the population of a county, that same type of 37% number, call it in the middle, keeps appearing. So it proves the point that this is not just an issue in Denton County. This is an issue across the United States. We're seeing it everywhere. And that's why we've got so many people sending us information saying, well, this is my case, this is my case. And when you get into the math and you're able to draw down like we did, you see it clearly. This is a huge problem.
Let's go into now why people don't see this clearly and why there's so much division. Obviously, it's a plan, a result of the intentions of others, but this is a really great Zero Hedge article. Mitch, again, man, thank you so much. I get how many emails a day, Mitch, would you say you send me? And we send each other, would you say? Depends on the day.
Yeah, exactly. Yeah, probably
but just
over a dozen.
I mean, the greatest information. This really is perfect for what I want to continue to discuss and have Mitch articulate. Name of this article, and by the way, you guys, this was out September 4th, so it's very new. What if all the conventional models fail to predict what happens next? And the first thing I'm thinking when I'm reading this headline, Mitch, is, what models? There's no models. It's all fraud. They keep revising the data. And it's taken me a minute to get that through to my thick head, Mitch. Because I was raised a certain way. So it's taken me time. But I want to read a couple things here, because this story really brings some really good perspectives and articulates the issue pretty well. And it states, a truly staggering amount of content is aimed at predicting what happens next, aka the future, and these people justify their predictions by referencing models that are presented as rock solid predictive tools. Got to be careful there. The majority of these models are based on historical examples that have been distilled into models of how the world works, like it's the Bible almost. i.e., claims that these were not one-offs or outliers, but examples of dynamics that will play out tomorrow as they played out 10 years ago, 100 years ago, or 1,000 years ago. Just a couple bullet points, and I'm going to uncage you, Mitch. Not that you're even caged, but it's fascinating. When I was reading this, I felt refreshed, because I was like, thank goodness there's someone else that sees. Those hazarding predictions typically start with a model. Keynesian economics, for example, that's something that I've been preaching to you guys for the last few months about the Keynesian economics. Keynesian economics is essentially government intervention. It's essentially the Federal Reserve. Austrian economics is more capitalistic. Austrian economics says if the government intervenes, it will eventually make the problem worse. It will devalue money. It's not fair, but this goes on. And then seek data to support their model of choice. It is relatively rare for an analyst to start with a mass of often incomplete and contradictory data points and hazard a prediction about what happens next without proposing a model. And that's the math Mitch was saying. It's like, okay, these are some crazy statements, but where the heck is the math? And that's what I've learned to really respect about Mitch. He doesn't have to listen to the words of people. He has so many different formulas. He could just use the math and come to a pretty accurate, as I've witnessed, conclusion. For without a theoretical model, skeptics can quickly claim the data was nothing more than a one-off and therefore of little predictive value. I see that all the time. And there's just 4 bullet points and we're done. Lacking evidence and understanding of invisible dynamics will conclude thunder. Guys, listen to this. Okay, we're farther than this, but this is what's happening. Okay, we conclude that thunder means that God is angry. You hear where they're going with this, guys? We tend to think we've risen so far above such casual errors that our understanding is now essentially godlike. When I read that, Mitch, I was like, oh my gosh, this is explaining society. I mean, this is really, really explaining the problem with society. I mean, we're in the age of information, and I feel like society is more stupid. And the only thing I can come up with is we've been successfully blinded by over-information because we have so much information. I wouldn't expect these same things to happen, and this goes on. But suppose none of our models are actually as predictively useful as we imagine. Okay, suppose the Keynesian economic model will completely miss the mark, like the Austrian economics say, and following that model is simply doing more of what's failed. And this last star right here, the possibility that all of our models will fail to accurately predict what happens next rarely happens to us, for it moots the entire project of making accurate predictions and mapping our responses. When I read that, Mitch, that's like poetry. I love it. I love how that broke that down. Can you explain to the viewers now in more detail the twist? What's the twist? What's the Federal Reserve doing? How does the briefcase work? How is the market stupid? The mic is yours, my friend.
So let's start this way. Past performance is no guarantee of future performance. And that article in Zero Hedge literally just made my case of everything I've been saying in the last 3 weeks. When you've got, these are supposed to be your inputs and some of them are missing. These are the criteria that help feed the inputs additional information. Well, you didn't even get this stage right. This stage is also full of errors. So this really comes down to financial engineering and human behavior. And when you do that, you have a goal, you have an agenda. Your documentation and your reports can only end up being false reports. They are false narratives. And that is what is being fed through the media. So these stories get picked up, but it will always end in a bad result because the reports are a false narrative. The reports are based on financial engineering, human behavior. And that is why you are seeing the parabolic nature of 3 different sets of criteria going straight up to the point where there is no math, there's no money to pay it back. So you've got 144 million households in the United States, single family households. If everybody saw these sets of videos, even this video, and they were told, look at what is really going on here and look at how you are being manipulated to do things that your human nature wouldn't normally require you to do. Well, all of a sudden, if you can stand back and get that clarity, and you say, well, wait a minute, I'm not going to be manipulated by any of this nonsense. Then all of a sudden you can think straight. It's astonishing how it happens because the money is the money. Your income is your income. Your expenses are your expenses. As long as you got more income than all your total expenses, why in the world would you want to even listen to these people but for the idea that you're trying to keep up with the Joneses? Well, that's more nonsense because the mainstream media is pushing this crap at you. It just isn't worth the play. If you don't have to have a $120,000 new pickup, don't have a $120,000 new pickup. You can get a 2-year-old one that's just as new at 50% off. It's a matter of thinking straight and having clarity. All these reports are just false narratives.
You know, Mitch, I don't have any money in the stock market. I probably feel like I can safely assume that most of the viewers don't have any money in the stock market. I'm not counting pensions and things. Why do you think so, and I'm making a video on the market. Why do you think so many people are paying attention to what the market is doing when A, we know that they're lying, and B, that it has nothing to do with us. I literally have no money in the stock market. Nothing that they're doing matters to me, but yet that's all that we see on mainstream media. Why is that, Mitch?
Because the mainstream media is filling time. They're creating screen time. They need something to fill it with, first thing. Second thing is, you actually tripped on it a second ago. A lot of people actually are in the market. They just don't know it. So if you have a 401k and that 401k says we're going to split it up, we're going to invest in pensions, and then from the pensions, we're going to split it up and invest in municipal bonds, or we're going to invest in school bonds, or we're going to invest in X. Well, the reality is, yeah, that pension is your money, and your money is now exposed. And therein lies another question, which is, will the 401ks be there when they're needed? And that is a function of what the government is going to steal in order to keep kicking this can down the road. You can't print your way out of this. They think they can. But if you print your way out of this, you're going to end up with the Weimar Republic. Like I said a couple of days ago, you are going to need a bucket full of cash to go get a loaf of bread. Printing is not the answer. Fixing it is the answer, and there is a solution. Just a question of the more people that know about this, the more power we have, the faster we can push that solution.
Mitch, let's talk about the fall of the Roman Empire. I think it's a perfect segue, because let's just say they do continue to print. We've been making a point, and other people are getting it as well. Fraud is holding everything together. If they use the math and the laws that are designed to protect us as the consumer, American citizen, it collapses 2 days ago. In other words, they can't use the math. When I stop to think about, and I slow down and I stop working and I think about, what have I learned and what does this really mean for me? What does this mean for human society? I mean, it looks like the same thing that happened with the fall of the Roman Empire has happened right now and has been happening throughout history because of human nature, sadly, and a lack of control, basically people turning into animals, leading to fraud, corruption, greed, and ego. And so I find incredible similarities. So let's read a little bit of this great article. And this, again, about the Roman Empire, it's going to explain to us what happened in Rome. Consider the keystone role in arches and ecosystem. So this is going to explain this to you like a keystone. A keystone is something that's very important, that holds something together. Removing the keystone from the arc causes the arc to collapse, but we're stunned when removing a species from an ecosystem collapses the ecosystem, because what we did not recognize is the species was the keystone species of that organizing system. Without that species doing its part, the whole system collapses. And just a few bullet points, really great stuff here. Our ability, here's the key, guys, to discern, discernment. Our ability to discern the many keystones in sprawling, complex systems is not as godlike as we imagine. There is the source of the multi-century debate about what caused the Western Roman Empire to collapse. Like many others, I often reference the decline and eventual collapse of the Western Roman Empire in my work, with the caveat that I don't propose any one cause with the sole keystone that when removed collapses the entire system. He goes on, this is good. Based on my reading of various authors, it seems the empire was beset by what we now call a polycrisis, which is a set of independent crises that feed back into one another, exacerbating the overall situation from one that the empire could have managed with sufficient time and effort into one that overwhelmed the remaining imperial sources. When I read that, Mitch, that was so incredibly powerful. When I read that, 2 more bullet points and I'm done. My point here is each of these causal chains runs through systems with each having a keystone. There wasn't just one keystone, there was multiple that supported the weight of the entire empire. There were keystones in vast range of systems, each of which was itself a keystone in the entirety of the empire. This is why I doubt any of the predictions about what happens next in the global and US economy, geopoliticals, etc., will prove accurate. Do you think that it's possible? You know, can you explain if you see, first of all, the same issues happening here in the US? And can you tell the viewers whether or not you think that it's possible the US empire falls, say, in the next decade or two?
Well, there's a lot to unpack there, but that article also makes the point of what we've been saying in these videos in the last 3 weeks. So it's 2 articles saying virtually the same thing, which is you can't trust the reports. When you look at the Mahalanobis model, which in theory should be used by the Federal Reserve for taking all these inputs and putting them in, it breaks down when each line item of the input or multiple line items of the input are bad data. And it's no different than what's happening at Denton Central Appraisal District. And when you have 2 comparisons out of 6 that are bad, well, we calculated that out using the infection rate spreadsheet as being 76% corrupt, bad data. The databases are completely garbage. There's been so much pollution put into the systems by virtue of the fraud that you can't get to the truth even if you tried. And that's one of the reasons why I'm such a huge proponent of standard deviation, because you can limit the amount of inputs and get fairly close to an accurate situation in terms of what is the probability of this event occurring. Standard deviation is a clean model. Mahalanobis is actually clean if you've got real data that works. Problem is they don't even have it. A, B, they don't care because C, it doesn't fit the narrative. So you have multiple problems here, but the point that I also want to make on this memo that came in from Zero Hedge, it can be summed up this way. Those who don't study history are doomed to repeat it. And what we're trying to do here as a collective society is stop an event from occurring before it even gets out of the chute. The problem is it is already out of the chute. The only question is, when will the market wake up and say, yeah, we realize we got a huge problem, there's no solution, and the market jumps in front of the collective society. The collective society is everybody that's watching these videos across multiple platforms now. So as people wake up and say, oh, we don't have accurate data, okay, step 1, tell the truth. And what I said several videos ago was, we are dealing with drunks. And until they admit that they're a drunk, we can't help them. The problem is, just like in a family situation, a drunk can take down the entire family. And that is really what we're dealing with here. When you financially engineer society, this is going to end badly unless you recognize what has happened and simply say, that's it, we're stopping here, we're going to fix it. This literally can be fixed in a matter of weeks, right? Once you tell the truth, the solutions are right there. The uniform sales tax, the infrastructure is not perfect today, but it exists. It's a great place to start. Get mom and pop to own their own balance sheet. Why should the government have a balance sheet as fraudulent as it is? Mom and pop are the economic engine. Those 2 things are all hooked at the hip. The fraud is hooked at the hip because that's the manipulation of mom and pop. That's the manipulation of the economic engine.
Let's talk about the society and the economic engine. Let's have a conversation. Let's end this video out having a conversation, Mitch, about division. Okay. Now, and here's why I say this. I did a video yesterday and I asked the question, and I want to clean this up a little bit because I do not want to create division, but I do want people to be held accountable. I mean, and if someone doesn't know something, well, once you know it, that's fine. Learn and then change is fine. But I made a video yesterday and I asked the question. A lot of people got heartburn over this, Mitch. And I asked the question, if a realtor tells a client that you should buy right now, and they say it with authority, they say it convincingly, you should buy right now because if you don't, home prices are going to skyrocket upward. The second interest rates go down, everyone's going to flood back in the market. Well, rates are down over a point. No one's come back into the market. Demand is still low. And my question was, if a realtor said that and a buyer purchased a property based on that statement, and that borrower now realizes that their value is not going up, that they're upside down, potentially some even becoming bankrupt, should the agent be somewhat liable? And then you and I talked, and I want you to tell the viewers, what you said. But I also want to make the point that, remember, guys, the realtor represents the broker. So to the brokers, be careful, right? Be careful what you're saying. But again, my point in saying that was the awareness and the change. But Mitch, can you go into kind of our discussion yesterday about realtors, kind of what you told me? Tell the viewers that you actually, being that you're a seasoned developer, you had agents in the commercial sector work for you. You had to fire them all. You fired them all because you didn't want them to represent you. So can you talk about realtors, and can you talk about how I can improve as a content creator to help them, and how realtors can help the community and help themselves?
Okay. Inside the realtor issue are several issues under the hood, one of which, probably the most important of which, is lack of training. So back in Canada, we were in the commercial brokerage side of things for a little while. I ended up firing everybody and taking over and doing it myself because I couldn't control their desire not to tell the truth. And even back then, I was as maniacal on the math as I am today. But you can't go to somebody and say, I'm going to take this listing regardless of price. Because if it's not going to sell, why do you even want that listing? Why do you, the broker, even want that listing on the books? If you say to a buyer, or let's stick with the buyer and seller of an industrial building, you have to have this building because this is going to do X for you. And if you don't buy it, then you're going to miss this opportunity. I'm going to sell it to somebody else. That's the equivalent of pump and dump. And let's bring it to local. So let's use local realtors here in Texas now. If somebody says, and they repeat what it is they've heard on mainstream media, well, they are again repeating a false narrative. That realtor is in fact no better than the talking head without the benefit of intellect, because all they're doing is repeating a false narrative. And that proves how bad this situation is. When in fact, if the realtor was properly trained, they'd be able to sit down and provide the service to the buyer. Either side, regardless of what the NAR has screwed up recently, but either side, you're providing a service just to sit down and say, let's go through the income and expenses. Let's do it up front and make sure that everybody's on the same page as to what it is that you can truly afford. Well, we heard from Jeremy Bagot that the appraisers are being induced to commit the fraud to hit the target, because if they don't, they lose their job or they don't get it. You're now seeing the problems play out in real time with the realtors. And I'm very sympathetic to that problem because I lived it myself. I know what the end result was. I had to jettison the entire staff because I simply couldn't tolerate it. And you've got to tell the truth. And by the way, I was rather successful at doing it once I took over, right? So you don't play people against the market. You simply look at the people and say, what do you need and what can you afford? Well, if you ask those two questions, you just wiped out 92% of the crap that you're now seeing play out with the National Association of Realtors, to the point where the NAR may actually lose big realtor firms. And they should. I mean, they should walk away and say that we're going independent, the hell with you. So there are, again, solutions to this, but you have to understand that people are literally right now today who are buying houses or intend to buy houses. They get to the closing table and they look at their truth in lending statement and they say, where the hell did this come from? I've got homeowners association fees. I've got property taxes that are going up. This wasn't part of my amortization schedule. So the realtor spent 60, 90, 120 days working with somebody. They get down to the closing table. The guy at the closing table, the husband and wife at the closing table, says, I'm out of here. I'm not signing this. And that is the exact same problem that was happening with me when I had the other realtors, the commercial brokers. And switching gears to a third element of this. So being in the commercial development side, and I bought empty office buildings and I filled them up. I've done all sorts of stuff. They have what's called tenant reps. These are tenant representatives. They are brokers that work for a licensed brokerage operation. To this day, I have never done a single deal with a tenant rep, and I will eat my shirt if I haven't been approached by at least 30 of them. Okay? So why do I not do deals with them? Well, because they show up and say, I want, which is automatically the hair on the back of my neck stands up, I want $90 a square foot in tenant improvement dollars for my tenants. Okay, wait a minute. Let's get something straight. A, you are a broker. B, you can't read blueprints. C, you don't even know what the costs are. D, you are a parrot without the benefit of intellect. And whoever told you that, you either think you're smarter than what we are, we're in the business, or you've got a serious psychological problem. So I just send them on their merry way, because what they're claiming for $90 a foot, I can do it for $27. Why am I going to hand them $70 free money? I'm not going to do that. I'm not going to put it on my books, and I'm not going to commit fraud at that over my banks. So you see, clarity gives you the ability to deal with these problems. That's the underlying point of all this. The realtors don't have clarity. The realtors, in truth, are being induced, just like Jeremy Bago said. They're being induced at every level to make stupid mistakes because they can't quantify what's job one. Job one is the listing that walks in the door. If that listing is real and is within a standard deviation of that marketplace, you've got something to talk about. If that listing is hyped because you wanted that listing no matter what, and you said, I'll take that listing even though it's $100,000 over value, there's a higher probability, right? That's what this is about, is probabilities. There's a higher probability that when you get down to the closing table, your buyer is going to walk away, and you're going to piss off the seller, and you're going to lose the listing.
And you guys, a lot of what Mitch was kind of segueing off of was, we had a conversation last night, or I vented at you, Mitch, really, about the new buyer's rep that is required for realtors to sign. And I was talking to Mitch, and I'm like, man, this is a complete con. I cannot believe that the National Association of Realtors convinced America that these new law changes were going to make a difference that would help people. In my opinion, these law changes now forcing by law, requiring a consumer to be bound to a realtor to sign a buyer's rep is ridiculous. It takes capitalism out of the market. Now, if I'm a horrible realtor, I could just say, sorry, you guys, you got to sign this because it's the law. I no longer have to sell myself. I no longer have to fight other agents to prove that I'm the best. Like, just sign this form, it's the law. And so I explained this to successful realtors as well. I was like, you guys, this is bad because now they've taken the competition off the table. That signing the buyer's rep was due diligence. That's something that made more competition. I had to believe and speak and understand my value, but now I don't. Now I just say it's the law. And now these realtors, these successful ones, are like, man, I'm repping like 15 people. I get a phone call when I see a property. I say to them, you have to sign this by law. And now they're repped for 6 months, Mitch. They're bound to them for 6 months. And so I guess it all comes back to what you said initially, which is the lack of training. And I wanted to encourage the viewers to understand that what Mitch and I are doing, and Mitch has been really influential, really motivating here, we're providing you guys the training for free. Even if you're a realtor, homeowner, renter, we have the courses. And I very rarely talk about my home buying course. My home buying course will equip you. I don't care if you're a realtor or a loan officer, you're going to learn something in that course. But more importantly, we've made a new course to where we can actually see a change happen in society, because it doesn't take a lot of people that need to step up to protest the value of their houses, the overvalue of their houses, to make a change. And I just wanted to show you guys real quick, okay? If you want to get access to this information, and please, you guys, the one thing I would ask for you guys is learn. That's what I don't want any money from you, but I do want you to learn, because when you learn and when you save your money, I learn and I save my money. You help everyone by saving your money. Isn't that a great system to be in? So all you guys got to do, you go to my page here on YouTube and you hit the community tab, okay? You go down to this post right here about fight property tax, hit read more, and click this link. This link is going to take you to the school, okay? And take you to this course. This is how to fight property value. I mean, I threw this out so much that I forgot to set a button here. It doesn't matter. This data is super good. I wanted to get this out to you as soon as possible. Few chapters here. I mean, look at guys, and these are about, look at a minute long, 47 seconds, 48 seconds. First chapter, what are property taxes? Okay, so we explain what are property taxes. Chapter 2 is how to calculate property taxes. Chapter 3 is the mortgage escrow and tax warning. Very important. You know, we do real life application. I take you guys to Zillow. Okay, there's chapter summary if you just want to go there. Chapter quiz. 4th chapter is property tax homesteads. You guys will become experts. Now, this is where we're at next. All right, we're at the protest section, but there is an intro from Mitch. My point is, we're not trying to create division. I get tough myself. I apologize. I have a bias. I tell you that all the time, Mitch. I have a bias a little bit because of my experience, but ultimately we need everyone to step up. Like Mitch says all the time, it is all hands on deck. And so, you know, for anyone that I offended, that's a realtor for my video yesterday. I apologize. My intent was to help make you stronger. So if I pushed you away, come back, take these courses, learn, step up, and help us create change. Mitch, before I go, can you tell people, you know, how to get a hold of you and anything else you want to end on?
Yeah, I want to go back on the realtors. So the National Association of Realtors did not do the real estate community any favors. They hurt them. So that has to be dealt with. I know that there are some firms that are looking at leaving the NAR, and that is probably the right thing to do, is to go independent, because you can't depend on them. They made decisions based on never even looking at what are the ramifications of those decisions. Should hobbyist realtors be in the market? In my humble opinion, no. Would I stop it? It's not up to me. But professionalism at this point is everything for the realtors to survive. And if you learn how to do a comparison, just for the sake of conversation, and so you take one of those courses that Travis was just showing, well, that's something you didn't know how to do, even for your own house. But if you do it for your own house and you can do it for your clients, that's a service that within a matter of minutes, you can be up to speed on and understand how to do it. But it gives you the ability to think of something and even have a conversation with your clients that you didn't have before. So the realtors have to exist because they do provide a legitimate service. The problem is it's getting muddy as to what that service is and who is doing the providing. So it really does come down to education. So I'll get off that topic. The way to reach out and see some of these things that we're doing is mockingbirdproperties.com/DCAD. That's DCAD. And we're mounting more and more data and videos. Everything that is coming through, even stuff from other states, is actually being mounted there. And if you have an attorney and you decide that you want to go full throttle past the ARB process, at that point, we can give you the code to the backside where there's gigabytes of data on how to get that task accomplished. So we will work with anybody. We'll work with their attorneys, with their accountants, anybody who wants to build these charts so that they can use it in their own community across the United States. That's really what that database exists for.
Okay, very good. And I'm going to get everyone out of here. But first, Mitch, the market's been open for a little over than half an hour.
I just looked.
Let's see. Yeah, let's see how you did real quick. All right, so here is the market. So the Dow it looks like it's barely up. S&P down. Geez, look at the NASDAQ down triple-digit points.
It was the NASDAQ I was looking at. Yeah.
Yeah, I mean, actually, before I just went here, it was down over a full percent. So looks like it is actually trending downward. So we'll see how that ends. I mean, it's been out half an hour. It has reversed. The VIX is back up 2%. You know, Mitch, again, man, I really appreciate how you're able to articulate things and give back to the community with empowerment, with your insights, with all of these things. So again, you guys show Mitch some love, go to his website. Everything is in the description. Literally, if you want to be empowered, you can do that right now by going to the description. Follow the links, empower yourself, help us create change. Now, other than that, guys, happy Friday. Good luck out there this weekend. Have fun, but not too much fun. In fact, I would challenge you to rebudget instead of go out. Rebudget with your spouse or yourself. Rebudget and save your money. And other than that, guys, if you're out there investing in real estate, you guys know we wish you luck and we hope you win.